Workers' compensation insurance protects your employees for injuries during the course and scope of employment, and it protects your business from related lawsuits. Trusted guidance is provided by FloridaWC.com, your partners for workers' comp.
Unlike other types of insurance, the Florida government determines the pricing associated with workers' comp here in the state. And this is done through the 600 different classification codes that are used for groupings of employees in the state. And each of those classification codes has their own rate associated with it. And those rates are all determined on an annual basis by the state government. And so it's unlike other types of insurance where, such as liability insurance, even commercial auto, commercial property insurance that are all used by your business. And all those types of insurance, carriers can determine their own rates and thus compete for your business based on price and also coverages and other things. With workers' comp, the coverage is all determined by the state statutes and the pricing is all determined by the state for each of those 600 classification codes that are in use. So it's a lot more difficult for carriers to compete for your business that way. One way that they can do it based on price is through what's known as a dividend program. And these dividend plans, there's three main types of dividend plans. The first one I want to tell you about is what's known as a flat dividend. And under a flat dividend plan, the carrier, they usually do it based on the classification code. So if they want to go after, let's say, landscaping businesses, which is used as class code 9102 or 0042, if they want to write more of those types of businesses, they'll issue a 5% or a 10% premium dividend to those, which is basically a discount to those types of businesses. So if you have a landscaping business and you write your business with one of these insurance carriers offering a flat dividends for your classification code, then at the end of your policy period, you'll either get back that whatever type of dividend is, that 5 or 10% dividend back at the end of your policy period. It usually occurs 3 to 6 months after your after your policy expires. You'll receive that back. And the good thing about the flat dividend programs is that they're not contingent based on your number of claims. So you can have 100 claims or you can have 0 claims, and you'll still get that same amount of premium back at the end of your policy. The most common type of dividend program is the second one that I want to discuss, and that is the sliding scale dividend plan. With this type of a plan, your dividend is determined based on your claims and based on not necessarily the number of claims, but based on the percentage of your premium that was paid out in claims. So these usually are determined a little later after your policy period expires, usually about 6 months though. You can still expect a full payment of these dividend plans. So if you have 0 claims, you'll get a much higher percentage of your premium back than if you have 2 or 3 claims, and depending, even if you have a lot of claims, you'll get none of your premium back at the end of the policy period. And I've seen sliding scale dividend plans run as high as, if you have no claims on your policy and you're a larger employer here in the state, you can get up to 20%, 40%, or even 50% of your premium back at the end of the policy period. So it's a very good option for employers, and it incentivizes the employers to be on the same path as the insurance carrier to reduce claims. And that's the big advantage of dividend plans and why the insurance carriers are willing to offer those to employers here in the state. And the third and final type of dividend plan is a combined dividend plan. It basically just combines these two approaches to dividends and offers you the best of both. So if you have no claims, you can get a much higher percentage of your premium back, and if you have a lot of claims, you still get that flat dividend back of more of a nominal amount, but 5% of your premium back, or whatever the dividend plan stated in there. And the last thing to discuss is something that you need to keep in mind when purchasing workers' compensation dividends, is that dividends are not declared, are not paid out unless they're declared by the board of directors. So that's important to know, and it's also important to understand that when purchasing a workers' comp program with a dividend plan, it's good to know that your financial rating of the insurance carrier and their financial strength, so that way you can make sure that they are financially stable enough to make those payments after your policy expires. If you have any questions, or if you're looking for what dividends are available for your own business here in the state, feel free to contact us here at FloridaWC. We look forward to working with you. Thank you for your time.
For more information, visit FloridaWC.com. We are proud to be your trusted choice.